Happy Friday, traders. It is 8 a.m. Chicago time on Friday, the 6th of August, 2021. This is episode number 2046. Thanks for coming in today on this non-farm payroll U.S. unemployment Friday. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Please give me a sound check real quick. Let me know how things are sounding on your end. I am starting from home today, traveling this afternoon. Get yourself ready. Lots of travel. This morning, we're looking at a market that is mixed. The Russell is showing quite a bit of strength, rotation into the small caps this morning. But overall, we have a mixed market. The NASDAQ is coming off. The overall picture from what took place in the non-farm payroll release is we had a pop up to new highs, new all-time highs in the S&P, but the NASDAQ really failed to show strength at all, and actually is trending down, is making a nice zigzag pattern down. Rotation out of techs into financials pre-market is how it looks. And so this is resulting in a mixed sentiment coming into the session today, likely to be a rotational day the way this thing is setting up. And that's probably the most important thing I'm going to say today, is to temper our expectations this morning, as we're expecting rotation after today's non-farm payroll release. So the non-farm payrolls came in at 943,000. Depending on who you ask, which feed you have, the estimate's 858,000. Most places put out a forecast of 870,000. In either case, blowout number. The prior was revised to 938,000 from 850,000. And the unemployment rate came in quite strong, 5.4% versus the expected 5.7, 5.8%. The prior's 5.9%, another blowout number. Private payroll, 703,000, a little bit short of the 709,000 expected. Labor force participation is 61.7%, in line. And that's where we stand this morning. This is a key release, and it feeds into the Fed interest rate stimulus and so on, and therefore direct reaction in the markets. As you can see in front of you here in real time, the 10-year note is off 14 big ticks, and the 30-year bond is off an entire handle and 11 ticks. What is that? 43 or so ticks overall. So pretty weak. The Euro Bund also coming off 59 euro cents. So rotation is into equities. It looks like crude is holding steady in the $70 mark, which is where the OPEC crowd wanted it to be pegged to anyway, and that's where it is. And then overall, you might have noticed yesterday had really terrible volume in the S&P, despite the test of the all-time high yesterday. We'll go over that in a minute. The S&P had 550,000 contracts traded in the RTH session, in the cash session. That is very poor. That's approximately half of the expected value, the expected volume in the RTH session yesterday. So moved up on negative delta. Anyway, I'm getting ahead of myself in the review, but pretty interesting stuff. And then this morning, despite the big number, we've traded 151,000 contracts in the S&P so far. Overnight inventory is relatively balanced at positive 14% or 14% long. The range is only 13.5 points from 44.16 to 44.29.5. relatively muted overall. The point of control is at 23.50 currently, which is just above the prior high of 44.22. So it's quite crowded today in terms of the price action. We'll go over that in a minute. And then the other thing is the items expected for the rest of the day are not expected to be movers. 10 o'clock Eastern, we get U.S. wholesale inventories for June, and the Baker Hughes can move energy prices, but not so much lately. Used to be a heck of a lot more important back in 2005 when crude was trading around $110, $130. Consumer credit coming out at 3 p.m. Eastern, and then balance of trade coming out of China at 11 p.m. Eastern this evening. So that's what we've got. Let's switch gears here into the review of yesterday's action. Yesterday, the primary scenario is a dip down, and the expectation is that we would likely push to 44.08 and then ultimately test 44.15 right here, very poorly written. 44.15 was a key test. Expected it to chop around the 44.15 and then ultimately push to 44.22, potential burst through the all-time high before falling back in line on the close. So the key targets yesterday, 15.22 on the primary scenario. This was spot on, as many of you have probably seen the tweet yesterday, just highlighting that this was our plan for the day, and that's basically what we got. Here's the action. As you can see, just by virtue of the number of bars in a Renko chart, that yesterday's action was a lot less than Wednesday's, which was a whole lot less than Tuesday's. It's just stalling out, slowing down as we are in the middle of summer still. But overall, beautiful test of 15, retest of 15, gives us the double top stat. Double top at the IB. There are two stats, double top, double bottom stats. There's a double top stat at the IB, and there's a double top stat at the high, and both carry a high historical probability. And as always, past performance is not necessarily indicative of future results, but we expect that 15 to go. So the question is, where do we jump in? Where do we jump in? The only opportunity that was credible is a breakout long after testing the RTH VWAP, looking for a break of that 15 from 44.13 and a quarter, 44.13 and a quarter into 15 to scale out and look for a break with a target again of 22 hit on the close. That's a double TPO high from the 29th of July. It is the all-time high. It is the weekly high. It's a whole bunch of stuff up there. Went to 22.75 and closed strong yesterday. We have a normal variation day, pretty decent balance in the middle, pretty decent excess at the bottom. You can see there was not much traded here before we moved higher on the open. We did chop around on the open and leave this kind of weak local low here, but the bigger targets, the bigger fish, as I said yesterday, was the 15 and the 22, and that was taken care of. The next price up, 27 this morning. The high, the overnight high is 29.5. And that was done on a collision before the market came off. The delta yesterday, weak all along. As we push away from the open here, the open yesterday was 44.06. As we pushed away from the open, the delta just remained weak throughout the session. Pretty choppy day yesterday. Not exactly my favorite, but there were a couple of opportunities there that had produced themselves for someone who is ready for them. Again, we come in here, we look at the context, we look at what the market has done, what tests has it made. Remember, the market is a machine that is designed to find value, to test both ends of the spectrum, and its goal, its ultimate objective, as any market's objective is to bring in, is to find that equilibrium point. For anybody that's done economics, you've seen the supply-demand curve, and the market's objective is to find this spot here, right? And so as the market tests up and down these lines, right, it does so simultaneously. As it tests up and down these supply-demand lines, its ultimate objective is to find a sweet spot, and that sweet spot is the point of control in the value area. The value area is just 1 sigma, considered a 1 sigma box around this area, and the point of control is the exact spot of a supply-demand curve in terms of pricing. And so that's what the market's job is, and so we really need to firmly hold on to that belief. It's called auction market theory. If you want to look it up, it's the basis of why I use volume profiling and what the market does, whether it's price action that you're using or order flow or whatever. The goal of any market is to get as many buyers and sellers to meet, and it does so by testing prices, moving in the other direction, retesting, back and forth until it finds equilibrium. A long period of equilibrium will likely result in one side or the other being wrong, and that leads to imbalance, a new test, more information coming in, more inputs, and it goes and finds a different area for balance. So as long as the market is hugging these highs, and as I talked about yesterday, this big box that we've been in for quite some time, this is balanced. The market has found, nirvana here. 4401 being the MC point of control of the region. Before that, 4319, and we're just ping-ponging our points of control back and forth, and now we're breaking higher. And the question now is it a sustained break, or does it fall into balance so that this box now expands slightly and just sits here, which is what it's been doing since the middle of July, okay? This is really important stuff. I know it sounds like I'm lecturing and it sounds like gobbledygook and just draw some lines on here and let me go, but this is the important stuff. You could see there's an excess here on the non-farm payroll. See that? There's an excess that was left behind above. There is no excess on the low, and it came right back through the point at which the auction was disrupted, which we shorten that and call it the scene of the crime, or the SOC, which was 44.22 1/4. That is the last print before the market moved away as a result of the non-farm payroll release, 44 1/4, and we have pulled back through. We tested 29.5 and we pulled back through all the way down and into 17 or so, and we are holding in the middle. This is good information here. It's telling us that the market could not sustain, despite the fantastic non-farm payroll release here that we got today, the market's not able to hold on to these high prices. There's something that's putting a wet blanket on this market, and that could be COVID, it could be the fact, the reopening, the fact that more and more stocks are getting hit that benefited from people being confined to their homes, gaming stocks and so on. The reopening issues are getting more favor, which is generally not in favor of the NASDAQ, which is more tech heavy, and so on and so forth. I'm not sure what the fundamentals are, and I'm not going to speculate on that, but those are some of the explanations that I see. But in either case, we saw an excess up here, and the question now becomes, does it get above 25 and hold above 25 on the open. It will likely retest that high. We have an overnight high at 29.50. Again, that was the result of a collision, and we can look at that here on Edge Pro X. Let me show you that. So this is, let's go back to the non-farm payroll release. Here's where the release occurred, right in here, 22 and a quarter. You can see it popping down, pushing down right into 19 or so, 19.5, and then it pushed up, and then we have this collision at the top. That is you could see there was some size here. There was some size, 450 lot or so. We came in, we collided against it at 29.5, came right back to the SOC at 22 and a quarter, and have traded sideways since, and poked down a little bit into 17 and holding sideways. So this is now just sitting kind of sideways here, with overall the delta being positive down here, 24.72. So the question becomes, do we get above this 25 and start migrating to the overnight high, or do we make an attempt higher and then push lower, take out the 17 area, and start making our way down into 44.16 for the overnight stat? The overnight stat, which historically speaking, the historical probability there is 97, 98% probability, historical probability that we would touch or breach the overnight high or low. Which one will it be? Right now, the way this is shaping up to be, it is looking like it's going for the overnight high. So I'm suspecting on the open, this is the chart that I want, I'm suspecting that on the open, it is likely to make a run for that 29.50, make an attempt at the high, pull back, and hold steady. You can see a lot of buying here, pretty good size on the tape, lots and lots of buying coming in as we start to lift towards the open, but pretty interesting stuff going on. Anyway, back to what we're doing here. Actually, let's move on and do our expectation for today, and I'll let you go. One thing I want to point out is that in the weekly, we've had a higher low, and we've breached the high by a tick yesterday. So in the RTH session, we only took out the high by a tick. It looked like there's suspicion that this may be a one-tick failed auction, but at the end of the day, the weekly trend is still intact to the upside, but overall today and yesterday were on top of each other and are basically in balance. Look at these things. This week and last week, all we did is migrate the point of control from 43.90 to 44.01. Prior to that, the point of control was at 44.02. So we have been in absolute and complete balance. Let me change the color here. Absolute and complete balance since a Friday 2 weeks ago, right in here. This is what we've done for a week and a day, is just ping pong sideways, back and forth between 65 and about 15. With a high of 22.50, and we are now on the upper edge. You can see where the last print is here, 25. We are on the upper edge of that balance, and to me, it has coiled a fair amount. There's quite a bit of volume up here, but I'm not seeing a clear cutoff. You can see there's active price discovery from 42.50, which is about almost 200 points ago. There's active price discovery throughout this range. This is looking heavy. This is looking not heavy, but it's looking like it has less commitment to the buy side in it, is what I'm getting at. We're balancing, we're pushing away. So the question this morning is, do you rip and go to 44.50 this morning, Or do you test that 29.50, maybe get to 30 and fall right back into range, and we start working ourselves back into 44.01 and potentially 43.90 for balance again? That's the key question we have to deal with. Let's take a look at our expectations for today. So, first thing to note, confluence in the measured moves right in here. Okay, we have a measured move high at 44.27 and a quarter, 44.31. That's here and here, and we have a high for the overnight session at 29.5. We are opening above the full session mid, full session VWAP. We are opening around the overnight point of control. I expect rotation and noise this morning. So look for open auction, look for it to test down into this 44.20 area, between 44.25, 44.20, expecting noise. So 20 to 25, expecting noise, expecting this kind of action here on the open, looking for it to bottom out, push for the overnight stat to 29.50, and then start squeezing towards this 38, where we are confronted with this confluence of multiple measured move targets, and then expecting it to pull back. So this 38 to 41 zone is expected to stall things out. If you're long into it, this is a good area to scale, in my opinion. And if you are looking for an area to get short, look for the push into 38.41 and then look for failure in the order flow or lower high if you're a price action trader, and then treat that as a scalp back into the range. I'm expecting a higher low, higher high today, but overall I'm expecting the market to really stall out. I'm not looking for this thing to rip from here despite the multi-week balance. Secondary, open auction, push towards the 29.50, find sellers, because there were definitely some sellers on the non-farm payroll. Look for an impulse down through the open, consolidation, and now a squeeze into the 16. If we get through the 16, the big area to target is right here. This area, 44.07. The 07 becomes the key target. That's about 20 points away. Push to 07, consolidate, and finish sideways. Higher low, higher high again. Those are the two key scenarios for today. Good luck, and just keep your eyes open, and don't forget it's Friday, so it's likely Friday in the summer, so it's likely to turn into a chop fest relatively quickly. So don't commit too much size or too much of your account to any given trade. Good luck. And if you don't mind, before you head out, it's like Friday, switch over to YouTube and hit the like button for me. I'd appreciate it. Good luck.